Myth number 8, my pre-need policy is all that I need. Well, first off, what's a pre-need policy? For those of you who don't know, the funerary business came up with this as a solution to the problem that I just pointed out in myth number 7, which is that if you don't get the full amount paid of the funerary benefits that they're offering, the products and services that they have, then you wind up with nothing. The pre-needs policy is an insurance policy that makes sure that they get paid. There's a couple of problems with this sort of arrangement as it might compare to a normal whole life policy that most actual insurance companies would offer. Everything is stacked in the favor of the funeral parlor in a pre-needs policy, and that's something you really have to understand. So first off, it's just designed to make sure that they get paid in case you die before you finish making your payments. And so as an example, let's say you take out a $10,000 pre-needs policy. You're making $100 premium payments every month, and so every year you're putting in $1,200. So after about 7-8 years, somewhere in that range, by the time you're about 73, if you took it out when you were 65, you'd have been paying it all complete and full, the whole face amount. And now the funeral home's happy because they got their money. But what's going to happen if you live to the age of 80? Well, you're just going to keep paying those $100 premiums month after month because you don't want to lose the value of that policy. It's going to go bad. You're going to let it lapse, just like any insurance policy. You got to keep making the premiums in order to keep it alive. But the value of your policy stops going up. It's still just the same face amount. That's what the problem is. You're not building up cash value in that policy like you would with a normal whole life policy, your final expenses, would you? You're not going to be able to borrow on it for any other purpose. It's all designated towards the pre-needs of the funeral home. And make no mistake about it. Do you know who the beneficiary is in a pre-needs policy? It's not your family. It's the funeral home. And what that means is, like most businesses, especially if they're unscrupulous businesses, but even if they're just savvy, as a lot of people of the world might say, then they're going to scrimp and save on what you actually can purchase with that $10,000. They're going to try to upsell products and maximize the price of it. And because of that, the industry became somewhat notorious in these pre-needs policies of having problems, and so some states start to regulate it. So if you have an irrevocable policy, you might be able in your state to get a 90% refund from that, and I might be able to help you get out of that policy and put you in something better. So think about that, because if you have a policy that actually increases in its cash value that you can borrow on, maybe have living benefits, accelerated benefits from, just in case you have to be in the hospital, maybe get some special care, have chronic illness before you pass, that those sort of things can be taken care of, and you have a lot more options. And besides all of that, if the family is in control of the money as the beneficiary, then they get to choose where the money goes in terms of memorializing you. So keep that in mind, because when you have the ability to shop, you usually can save a lot of money. And so you're going to probably get a lot better value, and your family probably going to appreciate that you thought about doing that for them.